Hello, and welcome to the mini-series of Lowcountry Money Talk with our financial expert, Philip Bloyd, who has been helping seniors and retirees for over 30 years. Phil will join us here in a moment to lend financial advice that could help you save on taxes, could help you know what's around the corner, and plan for the future, which is where Philip Bloyd and his team over at Revolutionary Financial Group can come into play. Here to help you plan for your financial future. Over to you, Phil.
Today I'd like to talk to you about tax diversification when it comes to income distribution. And I'd like to take a look at that in the form of buckets. We have income buckets that we've accumulated over our lifetime. The first bucket we'll talk about is capital gains bucket. Now, if we have a hole in our bucket, we can consider that and a bucket would be water, but we can consider that as being taxes leaking out of our bucket. That's why I like to use buckets. So the first one we'll talk about again is capital gains tax. So capital gains tax may be up to 20%. Most of the folks that I work with, we're about in the 15% area. So just consider that on average about 15, but it can be as high as 20%. The middle bucket, it could be the highest taxable bucket. That would be the income bucket. Your IRA distributions, your 401k distributions, any of your pre-tax distributions are going to fall within this bucket. And then the last bucket, and my favorite bucket, and hopefully your favorite bucket, is the tax-free bucket. And this can be a Roth 401k or a Roth IRA. So we've already paid taxes on this bucket. So when we take withdrawals out of this, if we follow the guidelines, of course, of our friends of the IRS, this can be a zero tax bucket. So we like that one a lot. Now, if you're 72, of course, you have to take a mandatory distribution from the middle bucket, okay, the income bucket. But what we don't want to do is take too much money out of this middle bucket because it may be taxed at the highest rate, up to the 37%. So if we have an opportunity to take a distribution from a Roth at 0%, or we can sell some stock in our capital gains in our cash account, in our brokerage account outside of an IRA, and maybe pay 15%, this would be much better than paying 22, 24 or more percent in the middle bucket. So if you don't have a strategy on how to take your income, you need to get one. So that's one thing that we do with our clients here is we develop strategies based upon the income that they need to take each year. And what we want to do, it's very important, of course, these days, is to minimize the taxation on those distributions. Thanks, and have a great day.
Wow, that was some great advice you just shared with the community. If you would like to learn more on how that directly applies to you, please give Phil and the folks over at Revolutionary Financial Group a call. The information is on the screen, so be sure to check out their website when you see they're hosting their next dinner seminar. Finally, be sure to tune in to watch their show only on WHHI and Sun City TV. It's Lowcountry Money Talk.